now to talk more macros, where the market setup is, the opportunities that also exist. Taher Badshah of Invesco now joining us live on the show. Good morning. I remember reading an interview of yours very recently, I think about 10 to 12 days back, Taher, where you actually said Indian markets are vulnerable as valuations are at a meaningful premium to global markets. With what's happened in the last fortnight or so, whether you look at the US or even in the Indian markets, where the levels that we are seeing didn't work out that way. What do you make of the market setup now, the valuations that we're seeing too?
So, basically the context that we were trying to actually communicate is that, look, I mean, we, throughout most part of 2022, we have, taken confidence in the fact that India's domestic economic drivers are reasonably strong, and we will stand up reasonably better in this whole global environment in many ways, not just with regard to inflation and interest rates, but even with regard to several other issues, and probably commodity prices also coming down, but incrementally turning favorable for India and so on. So the domestic setup for India has been reasonably strong, and that has also manifested itself in what the market has actually rewarded the Indian market. But incrementally, what we have to worry about everything in the markets, and the one thing which clearly at this stage we somewhat worry about is the fact that India too has been a beneficiary of the monetary stimulus over the last 2 years, and the recovery that we've seen in global economies through the external route. So essentially in the form of exports, which has done exceedingly well for India in many ways, in many sectors, in many industries over the last 2 years. So in fact, India's share of exports has actually risen from about 17, 18 odd percent to more like 22 odd percent of its GDP. So clearly that has provided us also with some tailwind and benefited some of our local growth dynamics. And now as we are coming into a phase where we can argue that, the global economies are likely to slow down, the extent of the slowdown is probably debatable, but we are going to see some bit of a let-off in terms of growth out there. And if India has benefited in the past, then it also probably stands to lose on that external front. And we are already starting to see some bit of that export slowdown come about, imports being relatively more stickier, leading to a current account gap, which is somewhat getting a little wider, manifesting then in the form of the currency pressures and so on and so forth. So I think that external vulnerability is something that we have to bear in mind, because it can have repercussions in terms of our monetary policies domestically, as we know. So I think that's where we are, and and then putting this in context with the fact that look, while India on itself, by itself, does not necessarily look very expensive at sub 20 1 year forward multiples, but in the context of where we are versus the rest of the world, we are at a meaningful premium. Our premiums have always been there, but they've expanded to virtually the highest ever in recent years. So in an overall global environment, which is basically going to see somewhat elevated interest rate table compared to what it was in the prior 3 or 4 years, and adjusted for that, I think that valuation can come as a deterrent for very sharp moves of the market from here to sustain, especially if the global scenario does not necessarily get better.
Taher, I was also going through your recent editions, and it goes with the entire theme that you have also already been playing, which is to do with financials, materials, and infrastructure. But talk to our viewers and tell us and talk to us more about the addition of IndusInd Bank as well as Bank of Baroda, when you already have a decent exposure to other financials like ICICI, HDFC, SBI.
I think we've only got a little more constructive and positive on the whole banking space, both the private sector banks and some of the top tier public sector banks as well. And to that extent, we think we are entering into a phase of cyclical strength as far as the banking sector is concerned, notwithstanding that there could be hurdles with regard to deposit growth, and we need to bring about some differentiation from one bank to another based on cost of funds and strength of liabilities. But in general, I think the environment is getting more and more supportive. This has been a favored sector for us for a long period of time. Didn't necessarily do as much in 2021, but is delivering on a good number of those levers in the course of this year. And we think this will further strengthen into 23. So I think as part of the widening of that basket, we have added a few more names. You called out a couple of names, both in the public as well as in the private sector space.
What point in time, what looks like a great outperformance by India will get challenged? If Fed indicates that US economy needs no more interest rate hike, could that be the turning point? Could the currency be the turning point? Because this kind of a massive outperformance may last for a year, maybe 18 months. It's not going to be lasting forever.
So I agree, and that is what we're kind of watchful of. We're not super concerned, but that is something which, at least from a rotational trade perspective or a tactical trade perspective and a global setup, can come in India's way. India, it may not necessarily be that India underperforms because of its own set of reasons. It's just that at some stage of the global market start looking more attractive, money for a short period of time can always rotate, and we've seen that on several occasions. From a more India intrinsic perspective, what may probably come in our way, if at all, is a much more elevated rate structure or interest rate level than we all have in our minds. Probably forced upon us by external conditions. But if that were to come to bear, then we will have some challenges with regard to our growth. As it always happens, some of these things like interest rate hikes and all that of this kind of a magnitude in a short period of time in any economy does not necessarily immediately show up. It does show up with a lag, and it can show up in the global markets. It can even show up in India. So long as that equilibrium of India's growth being ahead and not getting challenged by higher interest rates remains, we are fine. But if we come to a situation where interest rates start coming in the way of growth, then and valuations being where they are, then clearly, I mean, and if at around the same time we see global opportunities actually becoming more attractive, then investors can probably make that switch.
Great to have you on the show today. Let you go on that.